Everyone wants to know, is the bull market going to hold? The long answer is yes, but the correction may be happening right now. We're also going to take a look at one of the big earnings this week. Spoiler alert, it is not looking so chill. All right, guys, so why is today's sell off a little different than previous sell offs? Well, if you take a look at the general market in the past few months, we've been propelled higher by constant little consolidation, flagging out, you could say, and then a push higher. So that accumulation, distribution, accumulation, distribution. You could see these sharp moves clearly in this uptrend channel until recently. This is not a sharp move. This is more of a rounding move. And I fear that this long consolidation that's creating this rounding move can be also a broadening top. Now, when I get rid of all of these moves and I look at what is a broadening top, that's when you have a long consolidation and that momentum kind of gets thrown out, right? You're in this long consolidation. The bull trend is getting exhausted. It's kind of like a long road trip. If you're just on the road, you're going to have to take a pit stop. And it looks like that's what we're having right now. We're exhausted. Or I guess you could say on a long road trip, you're going to need to fill up your gas at that pit stop at your favorite. You could do Wawa, Sheets, whatever your favorite gas station is out there, your favorite stop on a long road trip. That is what's happening right now. We're refueling. So when we're refueling or when we have exhausted that fuel, you could start to see that tiredness, that breakdown happen. Now, according to the volume profile, we already started breaking down on Friday. I didn't want to get my members too involved in shorting the market until we had that follow through. By the way, if you guys want to join us and trade this breakdown with us live and through the month, we did take a directional trade with our members here. We do a 1 week free trial at tradetoclose.com/join. We have a group of over 500 members, and we love you to be 501. Join us. It's a really awesome community. If not, and you want to do it on your own, it's not for the faint-hearted, but these are the targets I'm looking at. Now we really started to break down with the 50-day moving average, and we're kind of targeting this giant lack of volume here. When you see these thin zones in our volume profile, right, we have a node here, and then what I like to call a lack of node or a thin zone, this can be the falling knife situation. The reason it's a thin zone is because when you see a big node on your volume profile, those are very popular price areas. Those are areas that traders like to trade at. Whereas these thin zones, traders aren't interested in trading at these levels. So you can have that big follow through or drop with price because no one wants to touch this thing. So it kind of can just fall out of bed. Your first target is right around 490, and your second target would be about 476. That's going to be a proper correction here in SPY. So the short term answer is yes, it looks like the market wants to come in a little bit. I would like to look at some puts to short here after we see this broadening top. Now we're breaking the 50-day. Now we're breaking serious nodes in our volume profile and entering in a capitulatory situation. Yes, short term, looks like the market is bearish or in bearish conditions. But long term, this could be the correction we've all been waiting for. And a bull market needs that correction. And most likely, we will find support here on this volume node and make our way, sashay our fine selves right back up to our all time highs. Now, everyone wants to know, what is this big earnings mover that's on my watch list that's not looking so chill? If you guys love awful puns, you know I'm talking about Netflix. Now, something cool about my analysis, even when earnings are coming, I can have earnings are binary. Is the stock going to gap higher or lower? What you can have is an edge. And I have an edge that I would say gets me 70% on the right side. So obviously, if you're trading ahead of earnings, it's a high risk trade, stock and gap higher or lower. But I have a bit of an edge here, and that is looking very similar to SPY is this broadening top here, top range in Netflix. Normally, this has to be a little shorter to portend a gap higher, but this move seems exhausted. And if you're exhausted until you fuel up, how will your car drive those extra 10 miles? As in, how will this stock have that extra momentum to gap higher? It can happen. It can happen. But the chart is telling me Netflix looks like it wants to gap lower. The targets here on Netflix, we're looking at 570 would be that downside. If you guys love earnings, can talk shop all day, you could join our free newsletter, Trading Today. It is always free. There's no trial. We send it out a couple times a week, and some video content is there as well if you like both. We talk about market direction, earnings, special watch lists, anything that's going to break out or break down, sector rotation. Yes, we call the run up in oil and gold, baby. You could sign up. We'll put that link below. And I'm curious if you guys think Netflix is going to gap higher or gap lower on earnings. Let me know in the comments. I love a piping hot take, and I love some piping hot tea, as you could tell with my throat. Hopefully I'll get my voice back soon. Thanks for watching, and Boss out.